So, what if I told you that a single number, just one, that came out this month might be a sign that we're literally talking ourselves into a recession? It's a number that caught almost every economist off guard, and it really makes you ask, how much does our collective mood actually shape the economy? Let's get into it.
And here's the number, 88.7. Now that might not look like much, but it's the latest reading for the Consumer Confidence Index. Think of it like the economy's mood ring. And right now, it is flashing a pretty serious warning color. Now, here's why this number sent a shockwave through the system. Economists, they were forecasting a 93.5, but the actual number came in way lower at 88.7. That isn't just a small miss, That's a huge gap. It tells you the models missed something big about how people are really feeling out there.
So, let's talk about why this drop is so important. This wasn't just one bad month. Nope. This was the fourth straight monthly decline. It's pushed the index down to its lowest point in 7 months. So what we're looking at is a clear downward trend.
But to really understand what's going on, we have to crack this number open, because it's actually telling two completely different stories. There's one story about how we feel about the economy right this second, and a much darker one about how we see the future. Okay, so for a little context, the Consumer Confidence Index has been around for decades. It's this huge survey where they basically ask people two things. How's the present economic situation, and what do you expect for your job, for business, for your income over the next 6 months? And the reason we care so much is that what you and I spend makes up about 70% of the entire US economy. So how we feel has a direct impact on how we spend. And wow, this chart just lays that split personality bare. I mean, look at that massive gap. The present situation index, how we feel today, is at a pretty healthy 126.9, but the expectations index, how we feel about the future, has just cratered. It's down at 63.2. That forward-looking number fell by almost 9 points, which is more than double the drop of the present-day number. So what in the world is driving this deep pessimism about tomorrow? Well, it turns out it's not just one thing, but kind of a perfect storm of three big concerns that are really weighing on people. When the survey asked people to just write in their biggest worries, three things came up over and over. First, you guessed it, high prices and inflation. It's just not going away. Second, politics and the recent federal government shutdown, which got even more mentions this month. And third, these constant worries about tariffs and trade policy. And you can see how these big picture concerns are trickling right down into personal fears. People are starting to see the job market differently. The number of people who say jobs are plentiful has fallen off a lot in the last year. But here's the real kicker. For the first time in 6 months, people's expectations for their own household income shrunk dramatically. And it seems that all the political uncertainty is hitting political independence particularly hard. Okay, so people are worried. That's crystal clear. But there is a very specific signal buried in this data that has historically been an incredibly accurate predictor of recessions. This is where the red alert starts flashing. Which, of course, brings us to the big question that everyone wants an answer to. Are these just bad feelings, or are they actually a reliable forecast of an economic storm on the horizon? And here it is. This is the crucial point. For decades, this index has had an almost perfect track record. Whenever that forward-looking expectations index drops below a reading of 80, a recession has followed within about a year. And like we saw, November's reading isn't just a little bit below 80. It has plunged to 63.2. But what's even more alarming isn't just how low that number is. It's how long it's been stuck in the danger zone. And the answer to that? 10. A full 10 consecutive months. This timeline really puts it all into perspective. This is not a blip. The index dropped into that warning zone way back in February, and it has been stuck there all year long. It dipped after some tariff announcements, it was still low at 71.5 in October, and then it just took another nosedive in November. This sustained, year-long pessimism is what's really strengthening that warning for a potential recession in mid-2026. All right, the warning signs are flashing bright red. So what happens next? This brings us to a really strange contradiction in the economy right now, and what we all should be watching for. This slide shows the paradox perfectly. On one side, you have our sentiment, our feelings, which are at rock bottom. People are pessimistic. But then you look at the other side, our actions, our spending. And yeah, retail sales have slowed, but they haven't fallen off a cliff. And the reason for this disconnect? It really looks like high-income households are still spending enough to kind of mask the weakness from everybody else. And this quote from Thomas Simons at Jefferies just perfectly sums up this fragile balance we're in. He's saying, spending isn't going to collapse tomorrow, but the foundation is definitely getting shakier. The risks that it could are clearly growing. So here are the 3 key things you're going to want to watch from here on out. First, what's the Fed going to do? This weak data makes a future interest rate cut way more likely. Second, the labor market. Does that jobs are plentiful number keep sliding? And finally, holiday spending. Those numbers are going to be a huge test. Will they be just okay, like retailers are hoping, or something much worse? And that really leaves us with the core tension of this entire story. There's this massive, growing gap between how we feel and how we're acting. We feel worse about the economy than we have in months, but our behavior hasn't fully caught up yet. The billion-dollar question is, when does it? How long until our spending finally decides to match our mood?